Is Tai Lopez going to jail? I don't know, but if he did what the SEC is alleging that he did, there's actually a good chance of it. It is one of the worst financial crimes that there is. It's called a Ponzi scheme. If you don't know who Tai Lopez is, he has been buying some of the best known bankrupt brands that have existed, like Radio Shack, linens and things. He owns these businesses. Well, they were big businesses. Now they are maybe not so much. You may know Tai from his garage videos all over Meta, Facebook, YouTube. Reading his book a day, teaching people how to do business. Well, hopefully it's not his way of doing business. Tai's entire business model was acquiring these defunct name brands, then moving them online to reopen them as new online businesses. It was actually a great concept. Buy the things that people know but still aren't making any money. Open up online where all business is done nowadays. Unfortunately, getting started with any business, it's unprofitable. Losing money. What Tai did to finance all of this is he was borrowing money from investors, a bunch of investors, paying these high interest rate returns. Well, you know what? Raising money for non-profitable business while you're paying these interest rate returns, you're paying returns to investors. Well, as soon as a lot of the investors quit investing, the house of cards falls because he was paying these interest rates. He was paying investors from other investors. That's actually the definition of a Ponzi scheme, when there is an investment paying returns to earlier investors from the capital of new investors. It's a scheme that I can tell you there have been more people going to prison and suicide than every other type of investment crime there has been. One of the reasons is it's just too easy to get caught up into it. Now, a Ponzi scheme is named after good old Charles Ponzi. He was an old con man. He was born in the 1880s. He died in the late 1940s. Well, around 1920, he started having people invest with the idea that you can make a 50% return in only 90 days. Give him the money. He's going and buying these stamps at a discount from international sources. He's getting them cashed out from the US government, making gobs of money from which he is paying investors. But the reality is that was not what good old Charles Ponzi was doing. He was paying these amazing returns from new investors. And you know what? You gave me a great return. I'm going to tell my brother. I'm going to tell my friend. They're going to invest as well. So the pyramid continues to grow. It is what is often known as a pyramid scheme. Those at the top actually get their money and an amazing return. And those at the bottom lose everything. I will tell you that anybody that is caught in these, if you were caught in one of these investments, oftentimes this will start to go through a court process that the courts will try to unwind the Ponzi. So even if you got your money back, there's a chance that the court will come and say, hey, you got these funds from a fraud. You got to bring them back and share the losses right along with everybody else. And that's why you got to be vigilant and watch out for these Ponzi schemes. Some of the ways that you can find them and identify them, and I'm not saying that these are the only ways, but things to watch out for, is when we have a business with unprofitable operations, but they're still paying returns to investors. The big question is, where are the returns coming from? Nowadays, a lot of people that are doing real estate syndications, they may have a first month mailbox money check being cut. The real big question is that coming from operations, or is it actually coming from the investor capital or another investor's capital? Something to watch out for. But at the end of the day, it is unprofitable operations that you are still paying some returns. Another way to identify it is when you're seeing consistent returns, regardless of what the market is doing. And by market, I mean real estate market, or very specifically the stock market. A great example here was the likes of Bernie Madoff. Bernie Madoff was paying consistent 10% annualized return from the stock market to his clients on an ongoing basis. Didn't matter if the stock market's going up or it's going down. He was paying those returns. And you know what? Bernie Madoff, he was well known and respected in the financial world. He was actually the chairman of NASDAQ back in the 90s. My point being is it doesn't matter how big somebody is. That doesn't mean they're not trying to get away with this scam. And good old Bernie ends up going to life in prison where he passed away. All right, we've got unprofitable operations, but still paying returns. That may have been a Tai Lopez issue. Another one would be the paying a consistent return, even though the markets aren't really consistent. That's a Bernie Madoff type issue. And then finally, when you see these high returns with low risk or returns that just don't really make sense. How does that cash on cash real estate deal deliver a 30% annualized return? Well, the promoters are either lying to you or they're really getting those funds from somebody else. And they may be trying to convince you that it was low risk. They may be trying to convince you for your family and friends to invest as well. These are the ways that you identify a Ponzi, but these are just one of many, but always stay vigilant. Now, I'm going to share a little bit of my own experience when it comes to Ponzi's. You know, I used to live in Las Vegas. I was practicing there in the mid 2000s, right up through that. Well, Great Recession starting in 2008. Unfortunately, I had a lot of experience with a lot of scams. Tai Lopez, yeah, I've seen the promissory notes from one entity to another. They kept issuing from different entities to different investors. They were paying out these loans. But then when the funds quit coming in, the whole house of cards crumbles. Another experience that I've seen, I hate to say a number of times, is one of these offshore hedge funds. The key component is offshore. When you're talking about these hedge funds, if they're in the United States, they're subject to SEC oversight. They've got a regulator looking over their shoulders to make sure that they're doing things right. That doesn't mean they won't get a little Ponzi or scammy out there. However, as soon as they say, I'm offshore, I'm not subject to SEC jurisdiction, they can get away with a lot more. So you need to be always afraid of offshore hedge funds, private equity firms, trading platforms, the white elephant investment opportunity that honestly doesn't exist. Another type of investment that can be more often a Ponzi are oil and gas. It is a huge investment type in Texas. There are some legitimate oil and gas operators that are out there, but there's others that are called wildcatters. And they're the ones that are convincing investors to invest into new drilling. Well, you know what? They can buy a land lease for $1 million, sell it to investors for $5 million, pocket a whole bunch, and oh my God, it's another dry well. It happens. Now, there are some larger syndicates that have been doing well after well, opportunity after opportunity, selling investors on this is some amazing tax benefits and even some good returns. Unfortunately, those oil and gas returns really just came from other investors. This one happened more recently back in 2024, and it ended up being, I don't know, a $400 million Ponzi. And a lot of people are getting in trouble over that still. Justice has squeaky wheels and can take a long time to come together. Something that's been more recent and most likely. Another asset class that I unfortunately have a ton of experience in identifying scams are mines and diamond deals, very specifically. With mines, there can be $1 trillion of proven reserves under a piece of land, and all I need are some money to start drilling it. But I can start paying you a return on your loans immediately, and don't worry about it. I can refinance my loans from you, Mr. Investor, from other investors. I'm aware of another diamond deal that it was the same. Borrowing from one investor, paying the return to borrow more from the other investor, or letting it roll. I can tell you that some of the key persons in this diamond deal that I'm not going to call out names, but have gone to prison, including their attorney, went to prison over helping with this scam. So stay safe. Make sure you're following guidance from your securities attorney. And if you do identify a potential scam, you can reach out to the SEC, become a whistleblower, file a complaint, and then you actually get a part of the recovery as well. To share and overshare. If you're running a scam, don't reach out to me, because I will be the first whistleblower there is. Because at the end of the day, these Ponzi's, these scams hurt our industry by making investments untrustworthy, and the reason why you should always be doing a whole nother layer of due diligence. And if you need any help, feel free to reach out anytime. Crowdfunding Lawyers, or you can reach me directly at nate@investmentlawyers.com. Good luck, all.